The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Okay, Friday the 6th of December. Welcome back, Jeremy. Good to see you.
Hi, Gareth. How are you doing?
Yeah, not too bad. So it's been a pretty busy week in terms of politics and the machinations of, in particular, France and to an extent South Korea. I'd be interested to hear what you think is relevant and where you think we're heading.
Yeah, geopolitics has sort of accelerated in this interregnum period that we have now between the changing of the guard at the White House. And I think the common theme, if there is one, is that people want to get things sorted before the big boss man returns. And, I think Ukraine is coming to a natural conclusion and moving into an end game. The Middle East seems to be flaring up, but in unexpected places, with things going off in Syria, maybe a final attempt at regime change in Damascus. And South Korea seems to have hit a sort of meltdown moment where the tensions between its president and its legislators seems to have escalated and certainly kicked off another dimension of the sort of uncertainty around Asian markets and Asian currency markets in particular. Closer to home, we've got the machinations of what's going on in France, which faces more political uncertainty and the collapse of the Barnier government, which lasted about 5 minutes. So Macron is saying that he will serve out the rest of his term, but seems to be blaming everybody but himself, including his electorate, for the situation that France seems to have got itself into. But there are significant implications in terms of the borrowing costs for France we've seen this week have risen, but they haven't ballooned out to sort of panic levels. But this is an area of uncertainty around how the euro area resolves its fiscal issues and its political issues.
It feels like France has got a pretty structural problem that's not going to be easily resolved. And it might be that the European electoral systems are not delivering clear answers at just the time when actually Europe needs clear leadership and somebody who can sort of coalesce some kind of government or European bloc to stand up to Trump. And they haven't got long to do it.
Yeah, I think that is a recurring theme in Western democracies, that there is a refusal to engage with what is commonly referred to as far-right parties. It was a feature of the pre-Trump election. It's a feature in the French issue in terms of refusal to negotiate with Le Pen's party. And it's a feature in Germany with a refusal to negotiate or to have truck with the AfD. Now, everyone's had their own view of the rights and wrongs of that. But yeah, it's a recurring theme of a blockage on political resolution of matters that have significant economic and financial implications. But to come back to the situation with France, the risk here to the wider euro area, France's fiscal situation cannot be let to get out of control. And Germany, which is normally the strong and stable force to underwrite these situations, is weakened and not really in a position to bail things out. So how has the EU resolved these situations historically? Well, it's one thing for the ECB to put in a technocratic caretaker prime minister into Greece or even Italy, which it's done previously. But to do so in France would be a step change.
Trying to impose that on France, I think, would, if anything, really ignite that right-wing electorate.
And left-wing.
Yeah, and left-wing, yeah.
Yeah. So it's both sides he's having to deal with, yeah.
You could construct a positive situation where if Ukraine can be resolved and comes to some kind of peaceful, stalemate or solution, and therefore Russian oil and gas can flow, energy prices come down and the German economy can pick up a bit, then they could help. But absent that, it doesn't feel like there are many ways out. I saw the French effectively rolling over last year's budget because they can't agree this year's.
Yes.
Which doesn't feel like a particularly great solution.
But despite all this, during the week, the main measures of sort of financial stability bond yields, the gold price, the dollar, oil prices, pretty steady actually. Stock markets moved to all-time highs, particularly in the US. And the main, if not only, game in town remains the Trump trade and how long it lasts. I think it was yesterday I listened to Nouriel Roubini, the economist and commentator, and he very neatly classified the balance sheet of risk of what Trump's economic policies might be. And I think he came down on the negative side, but it was a pretty balanced list. So overall, some of the policies can increase growth and they can reduce inflation and they can be pro-business, which is all very positive. You've got milestones coming up like making his first term tax cuts permanent, delivering this government efficiency drive, the Doge twins, and deregulating the economy more broadly to deliver supply side gains. And this whole area of increasing hydrocarbon production, reducing energy prices, not just in the US, but globally through the export, particularly of LNG. But on the negative side, we've got the whole issue of what does tariffs and protective measures around tariff policies actually mean? And does it mean that we have a wider economic trade war, particularly with China? And are they inflationary? And is he going to deliver on them? Then you've got the impact of any crackdown on migration and the impact that'll have on the labour market in terms of pressures on inflation. This whole issue around reducing direct taxation and increasing taxes such as tariffs could lead to an extended period where we have unfunded growing fiscal deficits. And then capping all this, we have the issue of what is Trump's team's actual policy towards the dollar. Trump is all about strength and shows of strength. So everyone assumes, and he often refers to, having a strong dollar is a sign of virility and leadership in the world. But actually to implement his reshoring programs and attracting people to do direct investment and to generate growth in the world economy, he needs a weak dollar. The fact is, since his election, we've seen dollar strength, but I think that is the unresolved indicator of where we are in terms of this Trump trade and how long it goes on for.
To summarise that, it feels like it's sort of small government and cheap energy on the positive side, and trade wars, protectionism, and the risk of a significant dollar decline on the negative.
Absolutely, yeah.
And closer to home, as you said, we've had this UK reset, not a relaunch.
Not a relaunch, yeah.
But doesn't seem to have removed confusion or solved the market's worries or lack of certainty about the direction of the Starmer-Reeves strategic plan, does it?
There was nothing new that they talked about that I could find, and it just seemed in my mind to increase confusion about what their actual priorities are. But meanwhile, the UK economy and the UK market seems to carry on regardless. We've had sort of positive house price data from Nationwide earlier this week that showed a much stronger rise of UK house prices in November. And I think as far as the stock market is concerned, well, Bloomberg had a rather concerning headline saying that the UK stock market was disappearing at its fastest rate ever. I think there's further evidence that despite the best efforts of the recent budget to undermine the tax effectiveness of the AIM market, the retail outflows to the UK market have probably bottomed out. We might not be seeing massive inflows yet, but we're clearly seeing an ongoing heightened level of M&A activity. But we're also seeing the recovering levels of capital market activity. I think the feature of the US recent strength in their equity market is that it's more broadly based and it's not just the Mag 7, which indicates to me a greater appetite to take smaller capitalization risk for the equity market, which when the dollar sorts itself out, then I think the UK remains an attractive place for international investors to park their capital. And from a stock market perspective, there's fewer things to buy. That's not necessarily a bad thing. You know, you need to get price appreciation in order to increase supply and lead to IPO activity and listing activity.
Potentially restart of his own devices rather than waiting for political ignition to help it happen.
Yeah.
Looking at the UK, I mean, we've had a reasonable amount of news this week. We had a couple of progressive clients reporting. We had Oxford Metrics, the sensing and measurement business. They gave us results for the year to September, and they reported, as pretty much expected, a pretty tough financial year 24. They had pressure in the entertainment and games sector, and to a slightly lesser extent across life sciences and engineering. So some difficult end markets for them, but they've pushed through it, and there's some interesting positives for the year ahead. They're launching their markerless product, which is image capture without all of the tags and things that people need to wear. And they're hopefully going to be able to bulk up the relatively new smart manufacturing business they've been investing in. They've got cash, and hopefully there'll be things that they can do to make that a more material part of the business moving forward. So there's been an interesting year ahead for Oxford Metrics. And then SDI Group, who manufacture scientific instruments and sell them into various markets, mainly academic in nature, they had H1 results to October. Those showed that revenue had been under a bit of pressure due to, in particular, reduced activity around life sciences, but both margins and cash were actually pretty good. We did trim our revenue forecast slightly on the back of that, but we left the rest of our forecasts unchanged, and we introduced FY26 estimates for the first time. So a decent set of results from SDI Group. It looks like the new CEO, Stephen Brown, is off to quite a good start. How are things looking next week? Feels like there's a bit going on as well. So what have we got to look forward to over that time frame?
So we've got the non-farm payrolls later today, and I think we need to watch out to see if last month's low figure was the one-off outlier that most people described it as, in part because of the Boeing strike and the effect of the hurricanes in the southern states. It's going to be an important figure. There's a lot of uncertainty around, not just in the US, but in the UK as well, around the reliability of labour market data. But yeah, I think the non-farm payroll although it's a volatile measure, I think 2 months of lower than expected numbers would start to register and could potentially dent this trunk trade positive outlook. But yeah, elsewhere, going into next week, we've got Chinese inflation data on Monday, followed, I think, more significantly by US inflation data on Wednesday, where a sort of continued, rather benign mid 2% figure is expected to continue, with a 2.6% year-on-year figure expected for November. And then moving on to Thursday, we get GDP data for the UK for October, which I think will attract some headlines regarding the impact of the sort of dent to confidence that I think most of us experienced in the run-up to the budget. So it'll be interesting to see how that one shapes up. And probably the big thing for Europe next week is going to be the ECB rate decision, which we get also on Thursday. The expectation there is for another small cut. So I don't think that's going to be any great surprise, but I think it's going to be more around the focus in the press release and the press conference afterwards around guidance to the future profile of rate cuts going forward. Clearly, there is a desire to try and stimulate further growth in Europe. As we discussed earlier, the political and fiscal situation is not exactly conducive to that at the moment. So how they try to square that circle, I think, is going to be very interesting.
Yeah. Anything the ECB can do to try and reduce some of that pressure or help would be very useful.
Well, I think the ECB traditionally has quite a reactive role. And as you said, who could take a leadership role in Europe? Well, maybe it's Christine Lagarde.
See how that goes down in France. But
yeah, exactly.
Yeah, fine. Great. Okay, well, lots to look forward to. Thanks for that. Good to catch up. And we'll look at all of that data and I'm sure a lot more this time next week. Talk to you then.
Okay.
Thanks a lot.
Bye for now.
Brought to you by Progressive Equity.